Good morning and thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Federal Reserve Chairman Jerome Powell has signaled that the FOMC is willing to ease monetary policy due to slowing global growth and no signs of overheating in the local jobs market. Bloomberg News has reported that Axis Bank will hold a board meeting on the 20th of July to consider a $1.3 billion fundraise, and bankers have already been appointed for this purpose. Brookfield Asset Management is planning an offer to buy majority stake in Suzlon Energy, lenders of which may have to take haircuts of up to 50%. That's a Bloomberg exclusive. Lenders had earlier said that a second debt restructuring was not feasible. CBDT Chairman PC Modi has clarified that FPIs or Category 3 alternative investment funds can opt for a corporate structure instead of a trust to avoid paying the additional surcharge that was imposed in the union budget. And New Zealand overcame a late resistance from India in the World Cup semi-final to qualify for the final on Sunday. It was a day of a positive trade in the US markets. Both the S&P 500 and the Dow Jones made record highs during the trading session. In fact, the S&P 500 rose above 3,000 for the first time. Dovish commentary from the Federal Reserve Chair Jerome Powell led to a boost in sentiment. Ranita Young of Bloomberg News tells you what happened in that session in this report.
U.S. equities ended higher on Wednesday in an energy-packed session, which saw the S&P 500 and the Dow Jones Industrial Average both reach records during the day. The S&P 500 ended just below that record of 3,000, and this all happened after U.S. Fed Chair Jay Powell signaled a readiness to cut interest rates, speaking rather dovish remarks about monetary policy and the state of the United States economy to Congress during the session. Now, meanwhile, we did see the dollar weakening versus major currency competitors, and as a result, commodities were a little bit higher. Treasuries were also a little bit higher, and specifically gold saw an increase of around 1.3% during the session. Meanwhile, we did see quite a few movers. Levi Strauss, which recently came out with its earnings the night before, actually dropped a little bit low, its lowest since late June, and that was after its softer second half sales offset its better second quarter revenue that beat analyst estimates. And that's a look at your Wednesday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's close the loop on international markets and take a look at Asia as well. A lot of the Asian markets are open as we speak. I'm joined live by Rosalind Chin, who's joining us from the Hong Kong studios. Good morning, Rosalind. From what I can see, it's green across the board. Do you think that that's going to carry out for the rest of the day?
You know, you took the words straight out of my mouth. Yes, green across the board, of course, largely on the back of Wall Street and also with the traders seeing more certainty of a rate cut later in July after Jerome Powell's testimony. But just like Wall Street, the stocks aren't gaining in a sort of blow away manner as they would have once done on such an expectation. Just like Wall Street, there are gains, but they are fairly muted actually today. In Asia, though, not looking too bad. We've got the MSCI Asia Pacific making gains of nearly 0.6% right now. Now, some of the markets, for example, Japan, those are making smaller gains, up by 0.15%. The Nikkei and the Topics snapping a three days of losses, up by 0.3% right now. We've had one stock there, Bandai Namco, that's getting a boost today after a surprise promotion to the Nikkei to replace Chiyoda, which has been demoted. So Bandai Namco right now are making gains. But we're also looking at the Kospi, because that right now is gaining nearly 1%. And that is largely, in fact, due to chip stocks. Chip stocks like Samsung, like SK Hynix are making gains today. Samsung up by 1.75%, SK Hynix up by more than 2%. And that is as analysts see chip prices possibly set to rise. Hana Financial Investments saying that if NAND contract prices rise enough, that could help chip makers reduce the losses from lesser sales. So right now we're seeing some of those chip makers leading the gains there on the Kospi. And in Hong Kong, we are watching the IPO of Budweiser's Asia Pacific unit. The company is guiding potential investors to that a good price. It's $9.8 billion IPO towards the end of a marketed range. It's been oversubscribed. The Hong Kong Economic Times saying it's at least 3.7 times oversubscribed in the retail portion at least. The order book closes at 5 p.m. throughout the regions, and it's expected to debut on July 19th, so we're watching that one pretty closely. The HSI in general up by 1%. Chinese markets also making gains. Shanghai Composite up by 0.4%. And to round things off, in Australia, the S&P ASX 200 making gains of about 1/3 of 1%. Back to you.
Thanks so much for that, Rosalind. Now, let's talk about that big update from overnight. After 3 hours of testimony, it became clear that the Federal Reserve is all set to cut interest rates for the first time in over a decade. Signs of a slowdown in the global economy and persistently low inflation were some of the reasons given by Fed Chair Jerome Powell in his testimony to Congress for his willingness to cut rates. Kathleen Hayes of Bloomberg News tells you all about that.
The risks from overseas, the risks from a trade war that creates uncertainty, tensions that could spill over into the U.S. economy. And these are the kinds of things that he put in his remarks, just in answers to questions, in his prepared remarks when he spoke to the House Financial Services Committee today. And in fact, compared to where the Fed saw the economy at the June meeting, he says manufacturing, trade itself, and investment have all weakened since that meeting. And when it comes to the big question for investors, for economists about what the Fed will do next, Representative Carolyn Maloney from New York asked the question that everybody wanted to hear. Here's what Jay Powell said.
Did the June jobs report change your outlook for whether a reduction in interest rates is appropriate in the near term?
Well, a straight answer to your question is no.
Okay, and let's hear the rest of what Jay Powell said.
The bottom line for me is that the uncertainties around global growth and trade continue to weigh on the outlook. In addition, inflation continues to be muted, and those things are still in place.
So there you have it, the global economy, the risk to the U.S. economy. But Jay Powell, didn't you also say, especially in prepared remarks, the labor market's looking pretty solid, the consumer has come back. Aren't you worried that a tight labor market could boost inflation a bit more than you want to see? Jay had an answer for that, too.
3.7% is a low unemployment rate, but to call something hot, you need to see some heat. And while we hear lots of reports of labor, of companies having a hard time finding qualified labor, nonetheless, we don't see wages really responding, so I don't really see that as a current issue.
With the Fed in the middle of its big monetary policy framework, for you, probably not surprising that a lot of the Congress people picked up on what's wrong with inflation? Why isn't it rising? What are you guys doing? And he admitted that things have changed. He said now, instead of having a Phillips curve where low unemployment boosts inflation, he said the link between inflation and unemployment is just a faint heartbeat.
All right, Kathleen, how about the reaction from traders and economists to all of this? Was Powell dovish enough to keep those bets of a 50 basis point cut alive?
Well, you know, that's a good question, because basically the consensus, which had shifted after the June jobs report, which shifted after Jim Bullard of the St. Louis Fed told us on Bloomberg Television that he was not in favor of a 50 basis point cut, 25 basis points has been where most people have been. After today's testimony, though, Morgan Stanley and UBS are still calling for a 50 basis point cut. They see Powell's testimony as pretty dovish, although Barclays cut their call back to 25 basis point cut at the end of the month, July 31st. When Powell was asked about this, he kind of gave it general references to things like strong data and how much these risks materialize. Ward McCarthy from Jefferies, though, is pretty straightforward. He doesn't think the cut was needed, and he thinks the only thing this is going to do is satiate the market's desire for more rate cuts and maybe give Donald Trump more things to tweet about. Jim Bullard, speaking in Washington today, said again the Fed should cut in July. He won't prejudge the outcome of all his members on the his colleagues, I should say, on the FOMC, but he thinks an insurance cut is needed to make sure that if these risks do materialize, there's a buffer there already. This is an insurance kind of thing you don't want to actually have to use, but that's his logic for why the Fed should be moving and moving soon.
Now, if you've been watching this program or Bloomberg Quint, you'll know that over the past few weeks, President Donald Trump has been making several statements against Jerome Powell. In fact, he's also gone to the extent of saying perhaps Mario Draghi would have been the better choice for Federal Reserve Chairman. But yesterday, he was asked a very pointed question during the testimonies. He was asked whether he would leave if Donald Trump asked him to go, and he very clearly, very categorically said that he would not, that the law provided him with 4 years and he fully intended to serve his term. Now, let's move on to another story. U.S. federal agencies are finding it difficult to remove surveillance cameras made in China after a ban was imposed on them by the Congress last year, citing security threats. The Congress has set an August 13 deadline for the removal of all the cameras. Olivia Carville of Bloomberg News brings you more.
So Hikvision and Dahua are global market leaders in video surveillance. Their cameras are in hundreds of countries around the world, and they use artificial intelligence to power advanced facial recognition software, 3D people counting, and also have the ability to produce sharp images in rain, fog, or near total darkness. The controversy stems from the fact that Hikvision is controlled and owned by the Chinese government, and a few years ago a Dahua device was found to have a covert backdoor that enabled unauthorized people to tap into the camera and actually take information off-site. And in addition to that, both of these companies have been involved in mass surveillance in China. So the reason why this is concerning to America is that these cameras are everywhere here. They're in American banks, technology companies, healthcare, hospitals, army bases, embassies, and even federal agencies.
Okay, Olivia, so there's definitely a motivation there behind this new law that seeks to ban devices in federal agencies. It's due to take effect, though, in 5 weeks. How hard is it going to be to remove those devices in that amount of time?
From what I understand, it's going to be near impossible to remove all of the devices, and that comes down to the fact that the sheer number is insurmountable. But in addition to that, there's 2 other layers of complexity here. We have a really complicated supply chain where you have US manufacturers who are able to buy these Chinese cameras, rebrand them or relabel them, bring them into the US and sell them as their own. So that effectively means when you walk into your local bodega or in the school car parking lot or at your local bank, you may see a camera that has a Panasonic or Honeywell label on it, but in reality it's actually a Chinese device in disguise. And then in addition to that, these federal agencies who are tasked with implementing this ban, the majority of them don't have the software available to know what devices are actually running on their networks. They don't know how many cameras there are or where they are. So that means they're going to have to remove these cameras manually, one by one.
Wow, that's quite the task. All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, well, if ever there was in the past couple of days a day when there's positive cues all around, today is that day.
Today is that day, and something that we were anticipating as well, because the commentary coming in from the Fed chair is certainly positive, something to a certain extent was anticipated, but something that Indian markets may not have completely taken cognizance of. So we're looking at the SGX Nifty advancing by around 0.3%. Yesterday we did see 0.5% cuts for the Nifty 50, but that's also largely on account of domestic cues. Do remember, we have more and more companies indicating that there could very well be a slowdown in order. Well, of course, mid-cap and small-cap indices declining further. So, of course, the PSU banking index was the one which was actually a drag on the entire Nifty index. That is a Nifty banking index. But let's move on and talk about your ADRs. 1.5% or rather 2% gains for HDFC Bank. Not too much to speak for when it comes to Infosys, Wipro and ICICI Bank. We will, of course, be keeping an eye on Wipro as it announces its earnings tomorrow. So today may be an important day for it. Tata Motors, Dr. Reddy's and Vedanta, on the other hand, losing out to a certain extent. But all of them losing out less than 1% for now. As far as foreign flows are concerned, well, the net outflow from FIIs is starting to increase ever so slightly over the past few days. Yesterday, they sold another 605 odd crores on a net basis. And DIs, of course, on the other hand, bought into the stock markets to the tune of 667 crores, again, on a net basis. But coming down to your contributors, well, more weakness in Bajaj Finance and Axis Bank, along with TCS and L&T. Of course, TCS was reacting to earnings as well yesterday. But on the other hand, we did see some gains in some of the private sector names, which actually cancelled out a lot of the losses which was seen in the PSU banking space. So HDFC Bank, Kotak Mahindra Bank and ICICI Bank advancing. But let's talk about how futures and options have stacked up. And for now, we're looking at no change in Nifty futures open interest. Nifty banking futures is where we are looking at a decline of around 2%, unwinding coming through. Your open interest across is still about, so it's 12,000 on the higher end. But now on the lower end, your concentration has moved from the 11,500 put to the 11,300 put, which means that we very well could see the Nifty perhaps hang around these levels of around 11,500. Let's wait and watch. We still have a long expiry to go. And of course, we did see more writing around the lower level calls, as one may expect. Let's move on and talk about your WIX. And surprisingly, even though the Nifty came off, we saw the WIX come off too by around 0.5% at around 13.6. Of course, the Nifty put call ratio remains at precariously low levels, now at 0.84. And this clearly means that to a certain extent, this indicates that markets are oversold. And by that, I mean only the Nifty. Of course, the Dewan Housing Finance and Reliance Capital remain in the F&O band. And we also have IDBI Bank and Reliance Infra joining the list of stocks in the F&O band. And of course, besides that, Interglobe Aviation was the one which was in focus yesterday. Knock of 11%. And of course, Ramco Cements, ESC and Tata Chemicals saw a little bit of unwinding. But, Alex, while many may expect a little bit of gains coming through the index, I suspect they may not be as much. And once again, it'll all be about stocks.
That is interestingly the case in the Asian markets as well. Yeah. There are gains, but not as much as you would expect after such a dovish commentary. Sure. Thanks so much for that, Agam. All right, let's have a look at what's making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
Japan and South Korea say they're willing to meet over Tokyo's decision to restrict tech exports to Seoul. However, the two sides need to overcome decades of mistrust, and neither seems to have much political incentive to resolve their worst dispute in years. President Moon has warned Korean business to brace for a prolonged battle, while Shinzo Abe last week accused Seoul of reneging on various promises.
This measure is a necessary review of export controls for Japan's national security concerns and not a monetary issue. We have explained that such measures do not violate free trade rules.
Our government is making determined efforts to have Japan's unfair export restrictions withdrawn and to find countermeasures. Most importantly, the government is committed to finding a diplomatic solution. We hope that Japan does not push this to a dead-end street.
Have voted to reform the pension system in a move that promises major savings for the government and finally establishes a minimum retirement age. The bill still faces legislative hurdles before becoming law, but the vote is seen as a significant achievement, as 4 previous administrations had tried and failed to enact major reform. The U.S. Justice Department is investigating whether Deutsche Bank violated foreign corruption or anti-money laundering laws in its work for Malaysian state fund 1MDB. The Wall Street Journal says the investigation is being helped by former Goldman Sachs executive Tim Leissner, who pleaded guilty to crimes connected to 1MDB last year. Deutsche Bank says it has cooperated fully with the inquiry. Global news, 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All right, the additional surcharge imposed on FPIs and alternative investment funds of Category 3 is something that spooked Indian equity markets and soured sentiments over the last few days. CBDT Chairman PC Modi clarified at an event last evening what exactly that means. Here's what he said.
The consideration was that the people who have the higher ability to pay can shell out more for this cause of nation building. And those were the people between 2 to 5 crores or 5 crores and above. That is why that differential difference in surcharge. And again, the base rate was not changed. It is just the surcharge which was changed. As a collateral damage, if you can call it, it affected the FIPs or the AIF 3 category, this thing. But there again, the option is to go to the corporate structure. I mean, say if they desire, it has been amply clarified in the clarification which has been provided. So I don't see that there is any kind of a differential treatment or this thing. Basically, the increase in surcharge was just to allow some benefit for the lower end. One of the options was to go in for increase as such, but that was not considered to be favorable.
All right, Agam's already pointed out in his trade setup, FIIs have now net sold just under 1,700 crore rupees worth of equity in the first 3 trading sessions of this week. Interestingly, the first 3 trading sessions after the budget day. But let's talk about the stocks that you need to watch out for in trade today. Mishika Parak is joining us now to tell you all about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. Lots of results and stocks that we need to look at today. The first set of numbers are coming in from Himachal Futuristic Communications. Their revenues are up 23%, the net profits up 139%, EBITDA is up 111%, and margins stand at 14% versus 8%. Now, these numbers were on account of a change in revenue mix, accelerated project execution, and improved efficiency. The next set of numbers are coming in from GTPL Hathway. Their revenues are up 50%, net profits up 123%, EBITDA is up 37%, and margins stand at 24% versus 26.3%. Now, the new tariff order led to a significant growth in subscription revenues, which grew by 47% year on year, and the broadband ARPU for Q1 was 420 rupees. Now, let's look at the stocks that we need to watch out for. Axis Bank will have a board meeting on July 20th to explore fundraising plans. And as per Bloomberg reports, Axis Bank wants to raise $1.3 billion via share sale, and the bank has already identified a number of bankers for the same. This deal would help the bank to give loans and boost overall capital buffer, which is the lowest amongst its private sector peers as of March 31st. Interglobe Aviation says that all related party transactions were executed at an arm's length. The related party deals were only 0.53% of the company's FY19 revenue, and the RPTs exist in 4 areas from 6 earlier. Aurobindo Pharma plans to launch Sina Calcet hydrochloride tablets in the USA, and these tablets had an annual sale of approximately $1.5 billion. Religare Enterprises plan on selling Religare Finvest to TCG Advisory for an undisclosed sum. And the last on my list is Premier Explosives. The company has secured an order worth 15 crores from Bharat Dynamics. Now, the order is for supply of solid propellants for medium-range surface-to-air missiles and will be executed within a period of 14 months.
Thanks so much for that, Mishika. All right, here's a special story for you. Satellites are being deployed by companies such as OneWeb, Elon Musk's SpaceX, and Jeff Bezos' project to bring broadband across the world, with $1.7 billion invested in space companies in 2019 alone. Bloomberg's Emily Chang reports.
Starlight, star bright. Wait, is that even a star I see tonight? High over the Netherlands in late May, objects in a train-like formation trail across the night sky. Not stars, not planes, but satellites. You can expect more scenes like this one, which had skywatchers head-scratching as the satellite race heats up with many more launches on the horizon. Elon Musk's Starlink program plans to propel nearly 12,000 satellites into orbit. Jeff Bezos' Project Kuiper has asked the FCC to approve roughly 3,200, and private company OneWeb has said it wants to launch 30 satellites a month by December. The goal for most of these devices to bring broadband access to the roughly 4 billion people on Earth who don't yet have it.
I think you can see going forward that access to broadband is going to be very close to being a fundamental human need.
While that goal may seem noble, these satellites are designed to fly lower, leaving astronomers concerned they'll interfere with the observation of distant galaxies. And then there's the cost. The first OneWeb satellites cost nearly $1 million each to produce. It cost as much as $16.5 million just for SpaceX to launch 60 satellites into orbit. Still, investors are rocketing forward. $1.7 billion was invested into space companies in the first quarter of this year alone, according to the VC firm Space Angels. That's nearly double the amount deployed a quarter earlier. So with these satellites, the space economy, so to speak, appears ready for takeoff. Emily Chang, Bloomberg, San Francisco.
Let me take you through some of the stories you'll find if you look up the website bloombergquint.com. You'll find interesting videos like that one too. But here's an important story. State Bank of India Chairman Rajneesh Kumar said lenders will soon be moving the Supreme Court against the National Company Law Appellate Tribunal, awarding higher payout to SR Steel's operational creditors and treating them on par with secured lenders. While approving ArcelorMittal's 42,000 crore rupee bid for the bankrupt flagship company of the Ruya-led SR Group, the NCLAT had last Thursday given operational creditors equal status as secured lenders. Now, he also spoke to Bloomberg Quint's Neeraj Shah and Vishwanath Nair, and that conversation will be available live at 9:30 a.m. You can catch that conversation right here on Bloomberg Quint Live on any one of our social media platforms, as well as the website bloombergquint.com. That's all you need to know going into trade today. Do stay tuned. Like I said, a lot more coming up in just a short while. This is Bloomberg Quint.